Well, hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friend, Sam Clement. Sam, how are you doing?
Hey, John, I'm doing good. How about you?
I'm doing very well. Certainly doing a lot better than a lot of those rain-soaked people down in Louisiana and parts of Mississippi.
Yeah, even parts of Alabama. It seems like some of the people down there just can't catch a break. It seems like it's one storm after another right now.
It's absolutely awful. There's been tons of damage and lives lost, and we certainly don't take that kind of thing lightly. However, Sam, it is important to note that weather conditions can sometimes lead the markets.
Yeah.
Historically, and I've only laughingly or tongue-in-cheek told people in the past that sometimes the most important news that you'll read is actual weather forecast.
Yeah.
With this go around, though, however, it's kind of strange. Things, at least in my estimation, I think you and I might be a little bit different opinion on this. Things, in my estimation, didn't move quite the way that I would have thought them to do. Because you take a look at, Ida, Category 4, fast-moving, shut down production for crude oil in the Gulf, shut down refineries, shut down petrochemicals, and even so, Sam, I would have thought that we would have seen a bigger spike in crude oil, at least as defined by that light, sweet West Texas Intermediate crude available for pickup in Cushing, Oklahoma. But as we sit here today, crude's trading $68, $69 and not changed terribly much. Ida doesn't appear to have done too much to the commodities markets.
No, it didn't do as much damage as I think some people may have expected. And honestly, what it kind of makes me draw a comparison to is between now and Katrina. And that was obviously the big comparison, one, due to where it was hitting and the size of it. But obviously one of the big positives was all the levees held in New Orleans, and the damage done doesn't seem to be as severe as Katrina. So that's obviously one positive. But the comparison that it makes me draw is between this past recession, this past COVID crisis, and the 2008 financial crisis, and just how much better the environment is right now and how much more capable we are to kind of overcome these disasters that happen. One being in the financial market, two being in the weather market and or the market that's impacted by this weather. And I think it just shows that we're in a much better spot. And the Corps of Engineers did a good job keeping the levees up.
Well, let's keep our fingers crossed that they do continue to hold up and that there's not another storm in the Gulf, at least certainly not another Category 4 that could threaten these levees. But you're right. Katrina certainly did teach us a lot of lessons about a lot of our weaknesses, and the levees down there and the levee systems that they had down there, a lot of it was good old boy network type stuff, and the Corps of Engineers finally had to go in there and really correct those. And I still don't think, as we do this here today, I still don't think we know the full extent of the damage down in Louisiana. I haven't seen as many pictures as I might imagine. I would imagine places like Grand Isle and Port Fourchon and some of the other places are absolutely wrecked. But with Katrina and the lessons that we learned there, I believe that FEMA will probably perform much better this go around than it has in previous situations like this.
Yeah, and luckily this storm doesn't seem to have brought just a sheer rainfall and just a total downpour. Katrina came and sat on top of southern Louisiana for such a long period of time, and while Ida was a slow-moving storm, in terms of rainfall, it was nowhere near Katrina, and that along with the levee seemed to be the real damage. But you see it every time a hurricane comes through, the power company stocks tend to go down, the generator stock companies tend to go up, and we'll do the same thing next time.
Well, without a doubt. And the thing is, here we are this year. We've seen a number of different weather disasters, and they have had impacts on the economy and even the markets. Ida, not so much, but if you remember, was it back in February, had that awful storm in Texas and just knocked out a bunch of economic activity. And more than that, it caused a lot of the supply chain disruptions, because all of a sudden we had all these houses where the pipes burst. I mean, truly just an enormous amount. I've got friends in the plumbing supply business that tell me about, my goodness, you can't believe the number of houses that we're going to have to go through and completely kind of almost rebuild due to the fact that just freezing pipes burst and ruined just the woodwork and what have you. So all of a sudden here is this freak storm in Texas. And Texas, as you probably know, is a big state.
Yeah, I do know that.
It has a lot of people living in it.
It does.
And so here we are in February of this year, as we're already struggling with supply chain problems. then whack, this comes around and really goosed lumber prices throughout the United States, as well as copper, and even just plumbing supplies just in general, just enormous backlogs of this product. And it remains to be seen, in my estimation, just whether or not Ida here is going to have well, it's not going to have the same amount because there's not many people live in Louisiana as they do in Texas, but whether or not it will eventually cause a backlog or a bottleneck in the distribution chain for things like lumber and plumbing supplies, copper and what have you, as homes need to be rebuilt. Sam, your thoughts?
I just don't think it will. I think a lot of the issues that we're seeing in the supply chain are really much deeper than just a place being shut down for a couple weeks. It's a complete shutdown that we saw last year, and a complete logjam of just a reversal in the amount of demand, going from none to more demand than we were experiencing before the pandemic. And I think that's really the issue that we're going to see here. So I am in the camp that we're not going to see as big of an issue come out of Ida as we may have.
Well, you're right. And what's interesting about hurricanes and just bad storms in general, you'll actually read some economists or analysts that will sit there and say this actually will spur economic growth as buildings are rebuilt and
the
all
broken
that.
window theory.
And that's where I was going with that. In case you're not familiar with it, famous economists back in the 19th century had an analogy about broken windows. If you break a window, you stimulate economic activity, right? I mean, you need to buy the glass. need to buy the glass. The glazier or gets paid. However, you can't base your economy on broken windows. Just like how a horrible storm will generate economic activity, you can't base your economy on horrible storms.
Yeah, I guess unless you're an insurance company.
Trust me, insurance companies don't want to base their business on horrible storms.
Yeah, no, but I think it is interesting. We've seen, speaking of insurance companies, we've seen all of them kind of beating their forecast recently, and just it's one of the few industries I think that talking of a broken window, the theory behind that, they're one of the few industries that really could actually see some positive impact, I guess, unfortunately, from such a storm like this.
Well, it may be a storm isn't too bad for business, but what happens is if you get 4 and 5 storms that come churning up through the Gulf or what have you, then all of a sudden you start running into some issues because insurance companies will have reinsurance.
Yeah.
And generally they will have reinsurance for a couple of catastrophes, not 4 or 5. I mean, years ago, almost in a different life, when I was at a previous employer, I managed the insurance portfolio for an insurance company, a small insurance company down in Florida. And that was the year that 4 or 5 hurricanes came through, and it got real difficult down there for them because they were running out of reinsurance pretty quickly. So when storms come through, it's interesting. People see the pictures of Bourbon Street, everyone being empty, see the pictures of that roof falling off, and understand that Generac will have a good go of it, and people will go to the Home Depot, the Lowe's, or Ace, or what have you, the big box sort of hardware stores, and this makes sense. But big storms like this have tentacles throughout things like insurance companies, reinsurance companies, and their impact on the overall financial system. So, Ida was just the first one. And, here we are. We're now getting into prime sort of hurricane type seasons. Sam, do you know anything about this hurricane season and whether or not, investors should worry about it for the remainder between now and November 1st when it officially ends?
Not to be the boring shut down the question. It's a good question, but I just don't think so. I mean, I think at the end of the day, we've talked about it 1,000 times. What drives the market is going to be corporate profits. And, there's been times where there's been catastrophes, some weather, some not. I mean, I won't list them all out, but the market tends to kind of just churn on and keep doing what it should. I mean, when we bombed Iran, was it a year or two ago, and that was a big deal at first because what was going to happen? Well, markets keep going up from then. I mean, you can list just about any tragedy, and they are still tragedies, but the market tends to just look back towards, okay, our company's growing, are their profits growing, and are they growing at a rate more than we expected? If it's all 3 yeses, market's going to go up. And so unless it's some mega storm that causes, all these companies to start having weaker profits, it's not really going to have that much of an impact.
And that's an important thing to remember that, life is full of unintended consequences or freak events or happenstances or what have you, or just unanticipated events. However, the markets, might wobble with an unanticipated event, but generally the markets, the long-term health of the markets is not determined by unintended consequences. It's based on overall economic activity, corporate profitability, and the reasonableness of valuations for investors. So one storm probably doesn't move the markets terribly much. Two storms probably doesn't. When all of a sudden you start seeing 4 and 5 storms and then a major disruption in overall economic activity, that's when all of a sudden the weather pages start to be the most important part of the newspaper. And same newspapers are things that used to be printed years ago.
I've heard of them. That's what you put on the table for a crawfish boil, isn't it?
something like that. So, Sam, what can we learn from anything? Anything can we learn about Ida? I mean, it's what have you seen and taken a look at some of the stocks and some of the sectors, and what has surprised you?
Well, what surprised me is almost what doesn't surprise me, that it keeps happening. You kind of hit on it, and I did too, is the companies that are impacted by it. And, it's funny, we talk about stocks being, forward-looking indicators of future profit, and somehow yet every time it's not priced in that the energy company in South Louisiana is going to be hurt from a giant hurricane, and the generator company it is going to have more generators be sold or more demand for their generators after an awful storm.
I swear, I think I might be the last person in the Southeast to have a generator. I don't have one.
I don't have one.
Okay, well then you and me.
I'll probably be the last. But no, it's that's almost what kind of surprises me, and we see it time and time again, is the efficient market hypothesis and how markets have priced in everything. Well, this Cat 4 hurricane was not priced in necessarily in all of these names, and I guess there's always a risk that the damage isn't as bad and the stocks wait to see it, but I think there's just lots of flaws, and a hurricane is one example of flaws in the efficient market hypothesis.
Wow, how about that? Did you learn that in business school? That sounds pretty fancy. But listen, absolutely no argument there. There are flaws in the efficient market hypothesis, and one of them is just generally it assumes almost an infinite basket of potential investments, truthfully. I mean, just how many baseball cards do you have, and just all of it. So it's very difficult, but that's a discussion for another time.
It is.
But in taking a look at what's happened with the energy companies, utilities down in Louisiana, and although these areas are prone to have storms, and they are, and we all understand that. You live at the Gulf Coast, you're taking some measure of assumption of the risk. I mean, you really are. That's not to downplay or minimize it, but to take in reading some of the stories about 2,000 miles of transmission lines being down, and a lot of it floating in the Mississippi River.
Yeah.
It's going to be a long time, I think, before South Louisiana, and we're talking about weeks and potentially months before it gets back up on board. The only bright spot, or sort of woohoo, is the fact that South Louisiana is not as important to the U.S. economy as Texas is, or New York with Sandy all those years ago.
And even those downstream refiners, most of them have said they're getting back online. Some of them even operated at a marginal capacity kind of through the storm. And some of the big refiners down there are the Citgo ones, some of the Marathon ones, what have you. Most of them are saying they're getting back up and rocking and rolling again. So that is kind of, I think the fear with a storm like this is if all of those refiners and the downstream companies were all shut down, okay, then you start to have some real issues, and that doesn't really seem to be the case.
And fortunately enough, in my strong belief in the private enterprise system, these people that refine this crude oil and what have you, they've got money online, right?
Yeah.
And understanding that they are refining this in places that are prone to have major storms, it would behoove them to actually prepare for it and make sure that their facilities are resistant or to tragic storms and what have you. And so that is really kind of a lesson there. You see, the private enterprise system has an incentive to make sure that it's back up in line quicker, sooner. And so that's how these refineries get back online. Sammy mentioned something about the levee system in 2005 with Katrina. That wasn't run by the private sector.
Right.
And so at the time, the levees were not prepared for a storm the same way the refineries would be, because they were owned by the levee systems were owned by the so-called public, the nebulous public. And had there been a profit incentive, I guarantee you that those levees would have performed much better then. And thank goodness the Corps of Engineers has stepped in and raised them to be Category 5 resistant.
It's private companies typically learn from their lessons a little, learn their lessons a little quicker than government facilities.
Well, that seems to be one of the major lessons that, unfortunately, a lot of people in our society just haven't learned yet.
If you're incentivized to learn your lesson, you're probably going to learn it a little quicker, compared to if there's no punishment for screwing up again the next time. So.
And I don't see how we can, how I can add anything to that, Sam. You're wise beyond your years. In terms of Hurricane Ida, obviously a lot of damage and destruction, lives lost, and not to minimize it. Storms, like this happen, and private enterprise system, prepares for them as best they can. But even so, it sometimes takes a little bit of time to get back up and running. But with that being said, let's just keep our fingers crossed we don't have any other major storms throughout the hurricane season, but understanding that if we do, the incentive for profit will mean that we get back up and running faster each time that this happens.
Yep.
At least that's what I believe. Sam, your thoughts?
I'm with you. I believe that too.
All right, guys, thank you all so much for listening. We always love to hear from you. Also, if you have any comments or suggestions, by all means, please drop us a line at tradingperspectives@oakworth.com, or you can leave us a review on the podcast outlet of your choice. Also, if you're interested in reading more, hearing more of what we have to say or how we think, you can always go to oakworth.com and take a look underneath the Thought Leadership tab. Sam?
That's all I got.
That's all I've got today, too. Y'all take care.